Hi, my name is Haresh Patel. I'm the CEO of Mercatus. We are a data management platform for private market investors. And I want to talk to you today a little bit about ESG. ESG has become something, what I would say, a bit of mild interest to where it's a mandate. If you want to raise money, at least from European LPs, which in today's world, almost everybody has to go global to raise new mega funds, it's a requirement. It is no longer an option. And ESG is an interesting topic because it takes about kind of three components to get where you need to be. First, you need to understand what it is. That's a consulting project. Second, you need to understand what is it you want to measure, right? Because there's different ways of reporting. And then third, finally, is the hard task of how do you actually pull all that data together? And that's where the devil's in the detail. And that's where we help as a technology platform. We help companies gather the right data, structure it correctly so that you can actually illuminate it to the ultimate, a limited partner or the pensioner, like you and I would put money into these pension funds or endowment funds. And where we think the industry is that ESG is a bit more than I would say, or close to a glossy brochure or a nice letter from the CEO, and that's not good enough. And LPs are beginning to demand about where's my data? And that's where the devil's in the detail. If you can't get to the data, and I'll explain what that means, then it's very, very hard to really have credibility to say you're really ESG compliant. And where the industry is falling down is that most technology that was built, like Mercatus, which is about 30 or 40 years old only, was built top down. It was built fund administration down, LP down, it was built portfolio company down, or it was built GP down. And the problem with ESG is you actually have to report up. You have to actually start at an asset, or what we call an entity. And that's almost like going deep underneath the ocean floor and being able to drill upwards to provide the data that you need at the top of the iceberg. And that's where the challenge is that to get to that level of data that makes you really truly ESG compliant, you really have to be able to start entity up. Let me give you a story, and I'm going to give you, I would say, simulated example. These are names that we all are familiar with, but it's not necessarily tied to actually those companies. So probably the most prolific letter that came out was from the CEO of BlackRock, Larry Fink, right? So he's one of the largest money managers and asset owners in the world. He also has investors behind him. So those funds come from large LPs that are endowment funds and pension funds. And let's say he's going to invest in a public pension fund. Let's say Apple is a core holding. So we got, let's say Harvard Endowment Fund is giving BlackRock money into a fund, and BlackRock is investing into Apple. That's the value chain. Now we recognize all three names, right? They're all world brands, world-renowned brands. So here's the issue. The industry is set up to be able to really diligence how BlackRock is doing between the LP, let's say Harvard Endowment Fund and BlackRock, and it's really set up to really diligence how is Apple performing and reporting to BlackRock and then reporting to the LP. The problem with ESG, or the opportunity with ESG, is that you really have to understand how the hundreds of Apple facilities are actually performing. And let's just pick one stream. Let's pick the energy consumption stream, right? Or energy efficiency, which is all around carbon footprint, which is a key part of the environmental aspect of ESG. So ESG, environmental, social, and governance, right? So it's those let's say they have 150, buildings across the world. I think there are a lot more, and they have all their stores. And let's say some of those stores or some of those buildings across the world have solar and wind power plants. In fact, their data centers are driven by renewable energy because they have a mandate. So in order to report up, you really have to understand how are each of those buildings performing relative to what they said they were going to do? How are those power plants performing? So that doesn't stop there. There's one more layer. Remember, Apple has hundreds, if not thousands of suppliers. Let's talk about now Foxconn, right? Foxconn has hundreds of manufacturing facilities. They may have wind farms. They may have solar power plants because Apple has mandated that, you have to be able to be, footprint neutral in terms of carbon. So you have to be able to start with those assets at Foxconn. There may be hundreds of other suppliers like Foxconn that Apple uses that has to report to Apple, and then Apple has to aggregate all of their buildings, and then they got to report that to BlackRock, and then now BlackRock has to consolidate that and report that to Harvard Endowment Fund. So you can begin to see that, there's an inversion of where the data is coming from versus where technology has been built. And that's where the ESG challenge is. So I want to talk to you about real-time impact of ESG because it's there to stay and it's impactful. So I had one of my executives that reports to me, a VP of product. He was at a social function, I believe a wedding in Houston, Texas. They were just talking about, hey, how's your business? He said, oh my God, I'm in the oil and gas business. It's just terrible. And he said, why? He goes, well, the oil, crisis has already kind of weeded out a lot of folks. He said, I know that. But there's just so much pressure. He said, the problem is that investors have gotten a hold of ESG data and they're beginning to realize that, oil and gas is not where I need to be. I need to be in a different set of asset allocation. And so their stocks have melted down. It has nothing to do with the prices have actually been stable for oil back about 3-4 weeks ago. But it was just that the data and now allowing investors to say, you know what, I got to change my asset allocation because these set of companies that were traditional oil and gas and that were fracking, aren't delivering the ESG metrics for me to be a successful investor. So the pressure of that these companies are now trading below book value is just creating chaos in how they run their business. Now, I can guarantee you, if you went to the same wedding and went to another table and you find somebody in liquid natural gas or renewables, their stock has probably gone up is because the asset allocation is changing. So this is showing real-time pressure of what ESG metrics are driving in behavioral changes for investors. So in this example of oil and gas, it's really around not the metrics of safety or what I call gender diversity. This is purely has to do with carbon footprint, right? Are we making the planet a better place for all of us to live? Are we reversing and halting global warming? Are we reducing our carbon footprint? So it's just measuring the impact of how these companies are driving that particular industry. It's just a single metric that's really, really critical. So again, if you were measuring how a renewable energy company has equal financial performance versus an oil and gas company, let's say the oil and gas company actually may have higher returns, well, then you're going to look at it and say, wait a minute, but these guys are driving a better E score in the ESG, and therefore I want to increase my allocation there. And it's that simple metric that is what I call tilting money flowing to the renewable energy side versus the traditional energy and power that we're used to, where we think these are the great stocks for all of us to own for a long, long time. If you want to learn more about what we call about ESG data, show me the data, and you really want to understand how to do it correctly in terms of really bringing efficiency and automation to data collection and data reporting, please visit our website at www.gomercatus.com. And there's an entire section dedicated to ESG and all the thought leadership that we put out there and the tools and things you need to put in place to really be successful, be an ESG investor in today's world.